I also want to bring up some of that econ data that we got out this morning, the CPI report, consumer prices coming in a bit better than expected, a third month in a row that we saw rising prices here. Some pockets of inflation maybe pushing up a little bit, but Brian Cheung, you're our Fed guy. How do you think the Fed, I guess, is going to be looking at this? Because we have that meeting next week where we're likely going to get, I guess, some clues about accommodative policy.
Oh, that's right, Shauna. It was an upside surprise on that consumer price index print from the Bureau of Labor Statistics this morning, but it still doesn't speak to any sort of concern over inflationary pressures when you consider that, yes, on the headline number, 0.4% monthly increase for August. A lot of people and economists were expecting that to be a bit smaller with the recovery having flattened out a bit as of this late summer. But when you still calculate that as a year-over-year increase, it's only 1.7%. Keep in mind that the CPI tends to already overstate inflation, and the Federal Reserve's target is 2%. So at 1.7% for the month of August, not necessarily pointing to that inflation overshoot that the Federal Reserve had been hoping for. Now, one other really interesting thing to unpack from this CPI report this morning is that about 40% of the increase in what was reported today was from used car sales. Consider that, for example, used cars as a measured and an index in the CPI surged 5.4% in August. That's a pretty remarkable increase. We've heard anecdotally about a lot of these used car companies, whether or not that's your local lot or some of these large publicly traded companies like Carvana, actually running out of inventory as people try to go out and buy used cars. And even data from Edmunds.com shows that if you try to buy a 2017 vehicle, the average cost was going to be about $24,287 in August. That's up over $700 from just July and up over $1,500 from June. So it shows that people really are scrambling to try to buy these used cars, which might be pointing to some inflationary pressures. But outside of used car sales, nothing really there. And because of that reason, I find it hard to believe that the Federal Reserve would react to what is a spike price in used car sales. So something worth keeping in mind as we head into that next Federal Reserve meeting next Wednesday, where the Federal Reserve has made clear, especially after that framework review change 2 weeks ago, that they are not going to raise rates anytime soon.
I agree with you. It's going to take a little bit more than just the rising prices of used car sales to get the Fed's attention. But Brian Cheung, thanks for breaking that down.